around. We're up floating almost 7K. You know what I'm saying? Literally. So there's just a lot of things going on this game, right? And the best thing is that we're all blessed to be here. So like everybody knows what comes with this game. It's not always gonna be beautiful. It's not always gonna be roses. You know what I'm saying? So like everybody knows what comes with the game. We got stopped out like 2-3 times this morning, and it is what it is. We took the learning opportunities, but I stuck to my analysis. I stuck to my bias, and you know what I'm saying? Like I wouldn't be floating 75K, you know what I'm saying, here with y'all guys right now. So like it is what it is. The moral of it is though, is just that the skill set will set you free, right? So I don't know if y'all know me well enough, but I started off taking Q-Bank's course, right? So I flew out to Cali and I was a part of Q's first 5-day course. I was one of the worst ones in my class, to be honest with you. Like I flew there, I didn't study shit, I didn't know I had to study, but you know what I'm saying, flash forward, here I am now, I never gave up. And that investment, I still have that notebook till today, and those notes that I took kind of helped form the Pack University. So it's just a lot of things that kind of go into the mix. There's a lot of things that kind of went into my characteristics to kind of define the trader who I am today. By the way, guys, floating 8K, just saying. We're definitely gonna have another 10K day today with ease. But the whole moral of it is, guys, is that I took time to kind of invest. We're still going. We're still in this signal. Up. I don't know what that is, but hold on. Oh, that's a fib. We don't need that. We just hit another TP, literally. I mean, look, we're flowing. We are flowing. Look at the entries. Stacked. We caught that move beautifully. Beautifully. You know what I'm saying? Went in there like swimwear. But the whole moral of it is just that I trade GJ, right? GJ is the pair I trade. So you know what I'm saying? So GJ is just going crazy right now, but GJ kind of owes me this crazy because of what happened this morning. I got stopped out 3 times trying to catch this trade, but the thing is just that I got wicked out. So one of my entries were bad. So when it came back to that retest, it retested like a support area and wicked me out. The second trade that I took, it did the same thing again, wicked me out. So I'm like, all right, sheesh. There's a lot of wicks going on, but I didn't let it deter me from my vision, regardless of the fact. What I did, I just entered again, and here I am now. We just made 11K the other day, and now we're getting in the habit where it's literally 10K every day. 10K every day if you pace yourself right and you do it correctly. 10K every day for at least 40. That's 40K for the week. You're making teacher salaries. You're making friggin' police officer salaries. You know what I'm saying? Like, you're doing shit pretty quick, so just don't forget the skill set will set you free. At the end of the day, as a trader, you don't need anybody to, you know, make your money. All you need is the skill set. So don't sleep on the skill set. Don't sleep on the skill set. And watch this. I'm gonna show y'all something lit. We're floating 8K again, just like that. Hold on. It's still loading. Oh, we went down a little bit, but we're floating damn near 7K again. So, you know what I'm saying? So I like GJ just because it gives me, when it trends, it gives me enough pips that I need to kind of continue to trend. But this same skill set that I'm showing y'all on live is the same skill set that you're gonna learn. Now, everybody's charts is always gonna look different. I know some of y'all are saying that, hey, my charts are a little cluttered, it's kind of hard to understand. Don't get me wrong, don't get it twisted. I know every detail. I can clear my whole chart off and I can draw the same exact thing again that I had before. It's how I like my technicals, it's how I see it. You know what I'm saying? So it's all about perspective at the end of the day. And again, if it ain't broke, don't fix it. My perspective is clearly working for me. I'm up 7 to 10K on a freaking Tuesday. You know what I'm saying? Ain't nothing whack about that at all. So
yeah, so like nowadays, like I'm willing to risk. And I feel like me being able to risk whenever I actually made that risk and made profit based off of that risk, it paid out 3, 4, 5 times, which means that now I have cushion. Me having cushion now means that I can take more risk, but also, you know, be a little bit more open with how I'm investing my money in this, how much volume I'm actually adding per order, and all these things. The person that's frugal or not willing to risk, they're not going to be in shit like this. They're not going to be able to afford the lifestyle that they dream of and that kind of stuff. Risking 1%. Risking 1%. You don't want to. You don't really want to be an investor. You kind of want to be an investor. You kind of want the lifestyle. You kind of want the success and that kind of stuff. You kind of want everything. If you're risking 1%, that's my take on it. If a person is risking 1%, they just kind of want it. They don't really want it. A person that's willing to risk, they want that shit. Listen, I'm gonna study my ass off for this amount of time, blah, blah, blah. Like, make sure that I comprehend the level of comprehension that I need to pretty much, trade effectively. And from there, I'm risking. Why? Because I'm risking because of this. I'm risking because I had, other income sources coming in. If I fuck up, all right, cool. I gotta probably wait like about 2 weeks, but I'm gonna fund that on that account again and study for the meantime while I'm building up that money to trade again. Which means that I'll bust my ass for 2-3 weeks and everything else, invest in an account. Throughout that entire time, I'm making sure that I'm studying, so like by the time that I have the capital and that kind of stuff to invest again, I'm on my shit. And then I'm a person that's not willing to risk more than 1%, they're not doing that. They're not seeing major life changes. And this is the craziest thing. Like I was driving here, the person that is risking 1%, the person that told them to risk 1% doesn't really have much going on. 1000%. The person that is telling the person that's doing 1% to only risk 1%, they don't have much going on. I doubt they have a lifestyle that you crave to have. And this is the wild thing. The person that told that person to do 1%, they're not doing 1%. The initial person that told the person that told you to do 1%, they're not trading 1%. That's if they are at a point that they could do like what they want. They got money coming in, money's like the person that is doing a lot when it comes to the investing game, they're not risking just 1%. They're risking 10%, 20% at times even 30%. But the risk to reward is there. You know what I'm saying? That's why, like, the question I asked this morning, I said, is it bad risk management if I lose $20,000 on a trade? You can only answer that question if you have that one factor, that one variable, which is, what is the account balance? If you do not know the account balance, you cannot say many things. You cannot say bad risk management, over leverage. You cannot say a person is over leveraged or bad risk management if you do not know their balance of their account. If that is a missing variable, you cannot answer anything else, because that's the main factor. That is the main factor, like right there. If that's missing, then you can't say anything. You know what I'm saying? That's why, like, you have to pretty much get to a point that you just understand these dynamics of trading, because once you do, I feel like you'll be a bit more open with, being open to a certain amount to risk. You know what I'm saying? Even risking 5%, 10%, honestly, like, that shit it makes life changes when it comes to making the money. I'm saying, like, if I'm risking $20,000, then more than likely I'm expecting to make like 50K, 60K, 70K off that trade. More than likely. Which means that if I'm doing a 2-lot on US 30, okay, I'm risking what, 20,000, right? But I'm projecting myself to make on that one order triple times the amount, or even 4 times the amount. And like, once I actually hit for that 3 or 4 times the amount, now I have all this fucking cushion, 60K, 70K in cushion, which means that now even if I lose one trade after that, I'm still up like $50,000. You know what I'm saying? Even if I wanted to up the lot size to 3 lots, okay, I'm risking 30,000, but now I could still be up $40,000. But now, what if I had that same 3 lot? I'm risking the 30,000, but now I end up making like $70,000 on that same 3 lot. That's how you fucking grow inside this fucking game, I feel like, man. And if you're not doing that, a lot of times you see super slow progress to the point that it doesn't even matter. super slow progress to the point that it gets annoying, because you fucking see this person on this side, like they've been doing so and so, and now all of a sudden they're making life-changing stuff. You know what I'm saying? Like, it could be simple things like, you know, getting a brand new phone, getting a brand new car, getting a brand new house, getting a brand new apartment, you start seeing changes, life changes, not just a couple $100s in your pocket. No, you start seeing fucking changes when you start being open to risk. Obviously, you have to be at a certain skill level and a certain comprehension level to actually be able to do this, but you should be striving to get to the point that the comprehension is there, versus just getting to the point that you have capital to just risk. The main thing is literally comprehension. Once that is there, you could pretty much risk but not risk. As far as you're risking so and so, but pretty much your comprehension is so on point that risk is calculated. Everything is calculated. You have a high chance of making this investment work now. Now, if that one trade works, now you have triple the amount to play with. Now you have cushion. The main goal inside this entire thing is cushion, cushion, cushion. If I have a 10K account, all of a sudden I grow it to like $120,000 and I lose 40K. From me just trying to up my lot size to risk for this upcoming trade that I see potentially happening. I lose 40K from the 120. I'm still good. I'm still good. I have 80K. Cool. I can still make a major comeback. Major comeback. You know what I'm saying? Like, I remember I did one trade. I think my account balance was like 150. I was negative, like it was a sloppy entry, a lot of stuff, but I was negative like 80,000 from like the 160. But I was so fucking confident. I was like, yo, listen, like, it's taking longer than I expected, but yo, this is gonna fucking play out. Like I calculated everything, I analyzed everything, like I read, you know, like I did my fucking research, I did my technical analysis, I did my analytics, and I made 176 on that trade right there. You know what I'm saying? I made $176,000 on that trade. That's a $176,000 trade that I have on YouTube that you can check out, that I made on US 30. Fucking incredible trade. Because I was willing to risk. Because once I'm willing to risk, bro, the outcome, that's what it's about. If I fuck up, cool. I go on like a 2-3 week hiatus, just fucking grinding out those next couple weeks till I get to a point that I could pretty much, you know, be on point like how I want to again to reinvest and that kind of shit. But while I'm waiting to reinvest, I'm busting my ass, fucking grinding, studying, doing everything that I gotta do. But when it comes to investing, I'm willing to risk, because that payout, that's where it gets life-changing. That's where it gets life-changing. You know what I'm saying? So small account, big account, small account is where where the skill is made. The small account makes the skill. The big accounts maintain the skill. Put it that way. All right.
Can I turn $1,000 into $258,000 in a year trading only US 30? You can. Will you? Most likely not. Let's be completely realistic here. So instead of aiming for a 2,580% return or whatever that might be, try to grow the $1,000 account based on a set of rules. Just say, I'm going to risk this much to make this much, and then take it one trade at a time. What you'll find out is you're going to lift your head out of above the water every 3 months or 4 months and realize that you're in a ton of profits. Traders are too short-term minded these days. Like, you fund an account and you want to flip the $1,000 to 50K. What if you didn't put like a set number of what you're trying to, reach? Because the market doesn't care about the goal that you have set. The market is going to provide you opportunities. So your job is to take this $1,000 account and to go take advantage of all these opportunities. And then if you keep taking advantage of opportunities with proper risk management, eventually you're going to be in profits and you're going to continue to grow the account. So focus more on taking good trades than you are on reaching a specific dollar amount goal, because that dollar amount that you're listing is a little bit, audacious for the account size that you're using. Break-even trade, starting to see profitability. What are some tips and things I should look out and focus on? If you're a break-even trader, most break-even traders have the same problem, which is you have an extended period of positive return. So like 3 weeks, 6 weeks, 12 weeks where you're following your plan. and then it only takes 1, 2, or 3 days to completely blow that profit away. Typically, like the fall from glory is a lot faster than the rise it takes you to get to that profitability. It might take you months to achieve a certain amount of growth in the account and days to blow it. And so the most important thing that everyone can do is to create guardrails for yourself for those moments where you're likely going to blow the account. A lot of people are like, we're all having a discussion right now, and imagine you guys are really motivated and you guys write this stuff down and you're ready to crush the week. The person that's going to show up next week is not the same individual that's here right now. A more tired version of you is going to show up. A less motivated version of you is going to show up. A less disciplined version of you is going to show up. Your wife might have said something to you on Wednesday that pissed you off, and you're going to show up different on the to the markets. And so what you have to do is kind of prepare yourself for the times where the worst version of yourself is going to show up on the charts. And because that's the person that's going to blow the account. It's not this person staring here that we're having this discussion and you're very motivated and you have a ton of discipline right now because we have a clear perspective. It's the version of you 6 weeks from now where the bills are due, you're going to start to rush trades in your account, you're going to lose 4 trades in a row, it's going to cause a trigger and a ripple effect into your results. That's the person you have to prepare for. So in writing your trading plan, and this is what we promote to all the Chartaddicts students, is make sure that you're writing the game plan in a language that you can understand, and write it for your future self. Write it for that gremlin version of you that's going to show up and fuck up your account at some point, because that version will show up. And as long as you can prepare yourself for that and you're not naive about human nature, then you can protect yourself from that downside. How do you focus on technicals compared to fundamentals? The course basically explains this, but basically I use fundamentals for my big picture understanding of the direction of price. So if I know the dollar is going to be bullish for 6 months, perfect. Then I use my technical analysis to trade within that trend. So in a bullish trend, I look for pullbacks and I try to trade the pullbacks. And then in a reversing market, I look for key levels and I look for the markets to hit a certain area of reversal. Then I use my understanding of candlestick reversal patterns to gauge whether or not that market's going to reverse. So you can either trade continuations or reversals. It says my analysis was on point, but I blew my account twice, then the market went my direction instantly. Nobody blows their account because you didn't see something or because of technical analysis. You blew your account because you have no discipline, you cunt. That's why. And nobody in your life is going to tell you this. And so, young chart addicts is out here to tell you the truth. Nobody blows their account because of technicals or fundamentals. All right? Everybody's asking me, Roy, if I take your course, can I stop blowing accounts? Probably not. You're blowing the account because you're trying to rush the process and you're over leveraging based on the capital that you have. Most traders are struggling because they're undercapitalized and they're over leveraged. It's not an education issue, and there's nothing that you can learn about the markets that's going to improve your ability to not blow the account. The only thing that's going to stop you from not blowing the account is self-discipline and proper risk management. And you guys can disagree with this shit all day and say, you know what, I want to leverage higher because I want to make more money. At some point, you're going to blow the account. Nobody's safe from blowing an account. $10 million, $100 million, $1 billion hedge fund. FTX just went bankrupt. 3 Arrows Capital went under. Celsius went under. What's that 0.72 or 72, whatever the fuck that company is from GameStop. Melvin Capital went bankrupt with $3 billion shorting. If you don't have proper risk management and you're overexposed on any one trade with your fingers crossed, hoping that trade's gonna go your way, you're not trading, you're gambling. If you guys are ever over leveraged and you're sitting there praying for each candle to go your direction, and you're just like, come on, please break the zone. And every candle that goes your way, it makes you happy. Every candle that goes against you makes you upset. You're not trading. You're just anxiously gambling. All right? So very important note. A lot of people think they're trading, but they're really not. How much to risk a day on a prop firm challenge account? Risk is very subjective. I'll just give you this example. If you have a 10% maximum risk on a funded account, that means if you're risking 1%, it means you have 10 trades total before the account's bust. And so if your win rate is really high, you don't lose that many trades, you can risk 1%, maybe even 2%. Now, if the strategy that you have isn't a high win rate, but when the trade hits, you end up getting a big risk and reward from it, you end up making way more than your losses, you want to reduce the amount of risk that you have on that account. Stick to 0.5% or 0.25%. Now, a lot of people are like, well, I can't make money with 0.25%, 0.5%. It's not about what you want, okay? Look at your results honestly. If you have a very high win rate and you're gonna win the majority of your trades, you can risk higher Because even if you lose 2 or 3 trades in a row, the 4th one that hits and the 5th one that hits and the 6th one that hits is going to make up for all those losses. So really it's understanding your data and understanding, are you a high win rate player or are you a high risk and reward player? If you're a high risk and reward player, it's your imperative to make sure that you're not over risking on every one trade, because you're about to lose 4, 5, 6 trades in a row before you hit a winner. So you can't be risking 1%. You're going to blow the account. All right? Very important. Now, if your win rate is 70%, that means that you're going to win 3 or you're going to lose 3 out of every 10 trades. Okay? And so if you're risking 2%, for example, and you're taking like 3, 4, 5 trades in a row, you could have all 3 of those losers come on the same day. And so over leveraging on the funded accounts is the biggest issue I see with people, because you want to be done with the challenge quick, and then once you get the account, you want to make big money. The key is to protect capital first and then to make money second. Most traders are not really trading, they're gambling. We went through this, which means that you're willing to just constantly put money on the line in order to get rich quick or in order to have a bigger payday. So protect the money first. You're a risk manager by profession. All right? Everybody here who wants to be a trader, especially for the long term, understand that your main job is to be a risk manager. Protect the capital first.